Tesla stock just had its largest single day gain in not the last month or 2 months or 3 months, in the last 5 months. Do you remember this rally where Tesla stock went from about 150 to 300? Well, you did not in this whole period of time see a single day's gain of what we just seen today, of 7.69%. We need to talk. We could be on the cusp of seeing a massive short squeeze. And I don't say this lightly. There's reasons for this, and we're going to get into it here in this video. The first thing I want to say is this stock is volatile, as you know. If Elon Musk wants, he could crash the stock tomorrow by cutting prices. Or, to the contrary, he could give us exactly what we need to see Tesla stock fly over $300 per share. It's really up to Elon. So take this information with a grain of salt, because anything can happen. I think to that same point, anything is possible, and it would be naive to not look into the possibility of an even larger rally to come for Tesla stock and potentially even a short squeeze. We know there's massive catalysts on the near-term horizon. The launch of the Cybertruck, the refreshed Model 3, the evolution of full self-driving. These are things that are not priced into Tesla stock today. We know about them, sure. But look at what caused Tesla stock to rally today. It was a couple different things, but a big reason why Tesla rallied today was the 10,000 NVIDIA H100 GPUs that went online today. We've known about this for weeks, but Wall Street apparently did not. There was other reasons why Tesla rallied today as well that could continue to help Tesla stock move higher. We will go over those catalysts and events later on into this video, but first I want to start with, in the theme of a short squeeze, the short seller losses. And the losses are extreme. So when we're looking at this chart, that's right here where my cursor is. This is the dollar amount that short sellers are making or losing on any given month. And this data is brought to us by Ortex. So December of 2022, short sellers made $5.44 billion. That is when Tesla's stock was selling off into the lows. But then in January of 2023, short sellers lost $4.52 billion. Short sellers lost $3 billion in February, and then lost another almost $200 million in March. And March was a rocky month as well for Tesla, but short sellers still lost about $200 million. And then in April, short sellers gained about $3.85 billion, and then the losses continued. The next month for May, short sellers lost $3.42 billion. Then they lost $5.66 billion in June. In July, they lost $533 million. And in August, so far, they have made $2.48 billion. Not after today. See, this data is somewhat delayed. It's delayed a couple of days. Now, on August 21st, short sellers lost $1.77 billion. And what was the percentage gain on August 21st? Well, 7.33% was the gain on August 21st. And really, ever since August 21st, Tesla stock has been moving higher. Pretty consistently, almost every single day has been green, besides this day right here on August 24th. So this move is about 3.5% from the close of August 21st until the open of today. About half of the move you've seen on August 21st. So in just this 5-day period, short sellers lost roughly another $1 billion, and today they lost about $2 billion. So in the course of 1, 2, 3, 4, 5, 6, 7 trading days, short sellers have lost over $5 billion. That's a big loss in a very short amount of time. That's a problem for hedge funds, institutions, and money managers that are short on Tesla. And that's because there's big catalyst on the near-term horizon. On top of any macro catalyst or market catalyst, you also have the launch of the Cybertruck coming, which has been in the making since 2019. That, need I remind you, has 2 million pre-orders. It's not a time you would want to be short in Tesla stock. That's for sure. But we also have the refreshed Model 3 Highland. We have the, as Wall Street now knows, the NVIDIA cluster. $300 million NVIDIA cluster of H100 GPUs that went online today to train FSD to speed up the evolution of robotaxis and full self-driving. Not to mention Dojo that goes live later in this year and will become, most likely, the biggest supercomputer in the world by the end of 2024. These are not things you want to bet against. And if you consider the macro, things that we've seen today, like bond yields falling, that could also help out Tesla, there's a very strong case to be had that we could see a short squeeze soon. See, today's data, and that was the JOLTS job openings, supports a soft landing. Tesla stock, in the eyes of Wall Street analysts, is already priced for a recession. A lot of your bearish analysts say Tesla is too expensive. But what are the estimates for Tesla? I've talked about this before, and I'll talk about it again because it's easy money. 27% delivery growth and 29% EPS growth. In the last 3 years, Tesla's EPS growth alone has been north of 85%. Now, I should also point out that Tesla is investing a lot right now and will be in 2024, upgrading Giga Texas, Giga Berlin, Giga Shanghai, creating a battery factory, multiple, creating a lithium mine, not to mention building Giga Mexico or any other projects they have going on. But still, even considering that, and Wall Street don't care about growth right now when interest rates are 5%. Let me just put that in there. But even with all of that investment, well, 29% EPS growth still seems way too low. And 27% delivery growth in a year in which we're going to have mass production of the Cybertruck, which is 2024, 27% delivery growth would be the slowest growth in Tesla's publicly traded history, going back all the way to 2010. So my point is pretty simple. The estimates are too low, especially if we get a soft landing and we don't see a recession. The current estimates on Tesla are already very much recessionary or baking in a recession. So on days where you get good economic data that shows we're not going into a recession, that the Fed might not need to raise rates again or keep them higher for longer, as you guys have heard over and over again until your ears bleed, very good news for Tesla stock. And it begs the argument that maybe the estimates are way too low if we do avoid a recession. Now, why am I talking about estimates for earnings, for EPS and delivery growth for next year? Well, this is something you should know. About this time every year, Wall Street starts to look at the next year. So right now, Wall Street, analysts, investors, they're not as focused on 2023 anymore. They're more focused on 2024. And as the future looks better and better for Tesla in 2024, that makes sitting in losses in short positions in Tesla a lot less desirable heading into a better new year. The dollar amount that is currently sold short in Tesla stock, not including the last 5 days worth of trading, which is an estimated loss of about $3 billion for hedge funds, is $19.15 billion. So once this data updates through today, you're probably at about $22.5 billion worth of short positions that Wall Street has on Tesla. That's getting back up to those extreme levels. So there is definitely a lot of short positions on Tesla that just don't make a lot of sense right now. And I think Wall Street started to come to that conclusion today. Taking a look at Tesla's technicals, that 50-day moving average is a very important level. That is trading or sitting right at $257.01 right now. Tesla stock closed the trading day at $257.18 per share. So above 257. And you really seen an end of the day push to this level. You hit as high as 257.77. And previously, about 45 minutes until the closing bell, around 3:15 Eastern Standard Time, you did see kind of resistance around 257, and then you broke above that in the last couple of minutes of trading. This was a very good sign for a continued rally. Now, after hours trading does tend to have less volume and is less active. Let me point out what happened today. Well, you were actually down in pre-market. You were down in pre-market. You sold off as soon as pre-market started at 8:30 in the morning. What happened to Tesla stock after? That's all she wrote. It was basically straight up. So you got to take these after hours and pre-market moves with a grain of salt. Right now, Tesla stock is trading at $256.32, down 0.32% in after hours. So not above that 50-day moving average right now, but that could obviously change at the start of the trading bell at 9:30 in the morning tomorrow. If it does not, then that 50-day moving average held as resistance, and then we could consolidate and then eventually make our way higher, or there's a whole different list of outcomes at that point. But as long as we get above that 50-day moving average, you should get a much larger move to the upside. But unfortunately, things can't be perfect all the time, and there's two ways that Tesla stock does not continue to rally, or that we do not see to some form a short squeeze. Number one is if Elon cuts prices. If Elon cuts prices in the US, Europe, or China again, the stock's going to fall pretty big. That's a given, and you already know that. It's not going to be seen as a positive for Tesla stock. The second is the economic data. Today, we won a battle in a very long war. That was great. The JOLTS job openings came in at 8.82 million. You were expecting 9.46 million. So this was so much better than expectations that how could Tesla stock or the markets not rally? The NASDAQ was up about 2.5% today. It wasn't just Tesla that did well. Tesla really outperformed, did better than a lot of other stocks. But here's the caveat. The Fed has been very clear. We need to see the labor market not so tight, meaning we can't have 10 million job openings or 12 million job openings. We can't have that at the same time a 3.5% unemployment rate. Because why? If the Fed declares they've beat inflation, well, and they cut rates, with that kind of tension in the labor market, odds are inflation comes back again. So the Fed has been very clear every single time they hold their FOMC press conference. We can see slack in the labor market two ways. Either JOLTS job openings coming down, in which we've seen today, that was really good, or the unemployment rate rising. The soft landing narrative that stocks have basically been trading on the last couple of months, ever since May, is pricing in JOLTS job openings coming down as the way the labor market gets to where the Fed needs it to go. Not that the unemployment rate rises. So today's JOLTS job openings could be a bad sign for the unemployment rate and that report on Friday. So if the unemployment rate rises by too much, we're expecting 3.5% unemployment rates, the same as last month. So we're not expecting an increase in the unemployment rate. That would be great if the unemployment rate stays at 3.5% and the job openings fell by 700,000. That's great news. That is your soft landing narrative. But if job openings came down and the unemployment rate maybe went to 3.7, 3.8%, then you bring up the hard landing question again, because unemployment is ultimately more important than job openings. So Friday is going to be a very big day for the markets. You're going to get the unemployment rate as well as the non-farm payroll report. That is the government labor report. But tomorrow, you're going to get the ADP employment change. Now, the ADP employment change, you are expecting, let's go ahead and pull this up. You're expecting, if I can find it, 195,000 job ads. This is a lot, okay? The non-farm payroll report on Friday, you're expecting 170,000 job ads. So they're pretty close, actually. If the ADP employment change comes in really low tomorrow, that's going to be more optimism heading into Friday. If the unemployment or if the ADP employment change comes in too high tomorrow, you're going to put a damper on this rally pretty quickly. That's the big caveat. There's still a lot of economic data that is unknown, that could affect the markets, that could push this hard landing narrative. Again, the JOLTS job openings falling this much on a month-over-month basis might not be a good sign for the economy, because now there's 700,000 less jobs that need to be filled. Did people also lose their jobs in the last month? Is the non-farm payroll report going to come in negative? Because after all, we lost 700,000 job openings. Wouldn't be too hard for the report to go negative. That would not be good. So I think the economic data could be something that could help us out a lot this week or really crush the markets. So I've been very clear on this. If we're going to get downside, it's because the economic data starts to look really bad, and this hard landing narrative comes back into the picture. Today's JOLTS job openings was a win, but tomorrow we're going to have the ADP employment change, and that is going to be a very volatile event for the markets as well. And then coming on Thursday, you're going to get PCE data, personal income, and personal spending data. That's going to be another wild card. On Friday, the unemployment report, as well as the non-farm payroll report, will also be very critical to the markets. Let's just call it how it is. That's a critical report. Really, all of the rest of this week is going to be big every single day as far as economic data. But then next week, we're going to get the CPI report. If we can get through this week and get through next week's CPI report and be on solid footing, and we don't go through a big crash or start to get a lot of fear in the markets, then I could see September, October being very good months for stocks like Tesla, specifically Tesla. Because why? There's massive catalysts right around the corner for Tesla. And literally any day, we're going to be getting the event for the Cybertruck and then start delivery shortly thereafter. I see a lot of reasons to own Tesla right now. No reason to sell this stock. And I think as long as the broader markets participate, we could be in for a much larger rally from here and go well above $300 per share. Let me know what you think about this down below in the comment section. Hit the like button and subscribe to the channel if you made it to the end of this video. My name is Michael Tyler. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.